Hi, I'm Eric Silverman, and you're listening to the Passive Investor Show with John.
The views and opinions provided on this show are for informational purposes only and should not be misinterpreted as an offer to buy or sell any securities or to make or consider any investment or course of action. For more information, please go to passiveinvestorshow.com. Hey PI listeners, this is John Fortes. I'm making it a point to speak to as many investors as possible. My goal is to position myself to be a blessing to my network through conversation. How could one be a blessing through conversation? The easy answer is by listening. A simple conversation can open many opportunities and doors. I always ask myself this: what do I have to lose by having one more conversation? Going back to high school, I've connected friends and family in my network to one another, even if it didn't benefit me. And I continue those same principles and practices. Why? Because it's the right thing to do. If I can't help you, I probably know someone or something that can probably solve your problem. I'd love for you to become a part of that network. Go to www.johnfortes.com, create your investor profile, and schedule a call. How can I best serve you through conversation? In the words of Clarence the Angel from It's a Wonderful Life, no man is a failure who has friends.
And now, the Passive Investor Show. Here's your host, John Fortes.
Welcome, PI listeners, to the Passive Investor Show. I'm the Passive Investor Consultant, John Fortes, your host of the only ranked podcast for passive investors in multifamily syndications and real estate funds. Our goal and purpose of this show is to be a resource to investors and help them master their passive investments by beating inflation 1% at a time. We're going to welcome back Eric. You've heard him on a previous show. Man, Eric, thank you for coming back and basically wanted to do this second show with us. I appreciate you.
Hey, I'm Eric Silverman. It's a pleasure to be on the Passive Investor Show with John Fortes. Unfortunately, I wore the same shirt as I did last week, but here I am. Nice to see you again.
Nah, no worries. Don't worry about that. Eric, this is a quick hitter. We're going to talk about what is a fund and what are the benefits of investing in a fund.
All righty. The biggest benefit of investing in a fund, in my opinion, is diversification. I mentioned diversification on the last show as the best way for an investor to de-risk any investment by having more than one and being diversified. The other thing that you get from being in a fund is you get the quality of an experience of the group that is choosing the properties to put in the fund. And there's many people who love picking properties and want to invest on a deal-by-deal basis. And I'm not advocating and saying that's wrong. It's totally fine. But there must come a realization for all investors to understand. I will give the example of Eastham Capital's funds. So we keep a running total of how many properties are presented to us by potential or existing joint venture partners. I'm not talking about what we're getting from the brokers. I'm talking about operators bringing us deals to invest in. On a typical quarter, we see over 100 deals, sometimes 150 deals, and we typically do 2 to 4 deals per quarter. So understand that we're turning down over 100 deals, pretty much over a deal a day, we're turning down to just do a few. And I think most funds have a similar funnel. And as an individual passive investor, how many deals are you going to see? And how many deals are you going to have access to? You certainly aren't going to see this many, and you certainly don't have the time to see this many. So a fund allows you the access to deals that are chosen across the many opportunities out there. So it's a diversification play, but it's not just like a diversification play like, okay, great, I'm in a fund and now I'm in a bunch of deals. No, these are deals that for any fund manager is very, very picky and careful about which deals go in their fund. Okay, so that's an important to understand. Taxes and accounting. If you have 1 or 2 deals, maybe 3 or 4 deals, the accounting is relatively simple. But as you have more and more properties, it becomes cumbersome. And especially if you're doing these investments with groups that different groups, and they have different urgency around getting you the K1s every year. As our fund, many funds don't do this, but we get our K1s out by the end of March, if maybe early April, but before the April 15th deadline. That's probably rare. And many passive investors have to live with assessing, okay, well, I think my taxes are going to be this. I'm going to pay this much on April 15th. I'm going to pay this much in quarterly. I'm going to do this, that, and the other thing. And maybe if I'm lucky by August or September, they send me a K1. Thank you so much. So ask the question, when do you get the K1? Okay, of a fund, of a deal, etc. The other thing that investing in a fund gives you, besides diversification, is it gives you the ability to build a group of investments over time. So it's not just diversification of partner and diversification of place, but it's also over time. And I think we know as investors that there's just sometimes when it's kind of turns out when you look back 5 or 10 years, oh, that year was better than the year after and the year after. So I'm glad that I did something in that year. Or the alternative was, oh, that was a really bad year to invest. I'm really glad that I did something both before and after, and that makes up that time diversification. So it's diversification across many different axes, if you will. And so I think those are the reasons to do, those are reasons that I can think of to do a fund. There may be more, and there are probably a bunch of reasons not to do a fund.
Thank you for sharing that, Eric. As we wrap up the show, I got one question in regards to a fund is, if I'm participating in your fund and there's an asset management fee, am I being feed on the capital that is not yet called down or used? How are you structuring that?
Depends on the structure. So our structure is a little complicated. We used to be 2% uncommitted, which would be the most bad, if there's a word, for investors. Like, you commit money and you're charging us fees. Well, our position was always, well, we have a whole staff and we're doing the work. I mean, we're looking for stuff. So yeah, you're paying the fees. We changed that a little bit. We tweaked it, and we now charge 1% uncommitted, not 2%. But once we call capital, we increase the fee to 2%. So it's not 1 + 2 = 3. It's we start at 1, and over an investment period of 3 to 4 years, it grows to 2%. And then we're 2% on asset management. Now, I will tell you the other side of the coin is that when we have JV partners who request an asset management fee, we negotiate that typically to 0. And the reason is because we're the asset manager. You know, you're not getting an asset management fee. You're getting a property management fee. Now let's talk about what that property management fee is. There might be some technical reasons why they will choose to allocate a portion of their fee to property management and some to asset management. That's a technical detail, which I can go into on our third show. But the bottom line is that, yes, we charge asset management fees. Now, I will tell you that when we take our carried interest, we have to return our investors all of their investments, regardless of any fees. So we only get our carried interest based on profits above an 8% hurdle. And we only get that if we deliver that return. And that's regardless of fees. Effectively, you pay the fee, but we take our bonus based on, us getting you back that fee, if you will. I got a little technical, apologize for that. But yeah, look, I mean, we're in a lucky position where we've had a long track record. Our fee structure is our fee structure. Our returns are our returns. And if people are interested to invest with us, they may. They need to be accredited investors. We're not the high bar qualified purchasers, which some funds require, I might add, but we are for accredited investors. We have not used the Jobs Act's components for non-accredited investors. We still require accredited investors. That's our fund structure. Others don't. But yeah, there's fees to doing a fund. There's fees to doing business. If you don't like paying fees, then do it yourself.
How can we stay in touch with you?
easthamcapital.com. See this? easthamcapital.com. That's my website.
Love it, Eric. Thank you for coming back on the show. Appreciate you. And man, I'm looking forward to having you back on.
Okay. I'm here.
Don't forget to download your free copy of the investment tracker. It allows you to track up to 5 investments, compare sponsors, markets, and most importantly, projected versus actual returns. To get your copy, go to www.projectedreturns.com. PI listeners, thank you for listening. As always, we hope this was the best resource for your investment strategy, but also the best use of your time. Remember, if this episode helps you, you can help us by leaving a review on iTunes. I hope you feel compelled enough to share it with someone you think this would resonate with as well. As much as it pains us to leave you, but you know what time it is. Time to go put this into practice. Till the next time we meet, happy investing. PI listeners, I'm grateful for your time and I appreciate you for listening. It would mean the world to me if you went to iTunes and left a rating and written review. Let me know how you feel about the show. It really makes a big difference with getting the podcast out there. Don't forget about our Facebook group, where all of our guests are members of. I'll be there to answer any of your questions, or even questions you might have for future guests. Subscribe so you can get the latest episodes and our fan favorite quick hitters. Finally, I want to keep you updated, so head over to johnfortes.com and sign up for the newsletter. If you're interested in partnering with me, sign up on the contact page so you can talk to me directly. I look forward to connecting with you. Happy investing.